Folks, I believe this one stock will make millionaires. Right now, we are in the middle of an aggressive bull market where massive returns are possible. Right now, we have three major themes working in our favor: artificial intelligence, a very pro-business administration coming in, and Fed cutting. Yes, today the Fed apparently canceled some of their rate cuts for 2025 and markets tanked, but I'm going to explain why this is actually a super positive thing for us trying to make money. And in today's video, we're going to break down the latest plays. What's working, what's not working, and then we're going to go on to the main entree, which is one stock that I believe has massive upside, and you're not going to want to miss this one, because I believe if you're looking at this video in, say, 2-3 months going out to March, you're going to look back and be like, damn it, I wish I bought that stock. I wish I went all in that stock. I wish I'd put a lot of money in that stock. And I'm going to make the case for this, and you can be the judge, but I think I'm going to be making a pretty convincing one. And as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. So Powell comes out and he says, hey, we're cutting rates 25 basis points, and then we're only going to cut 2 more times in 2025. And massive red day, because market participants thought we might get 3 or 4 rate cuts in 2025. Powell confirmed just 2. Now, when all is said and done, we don't know how many they're going to do, but let's just say we're going with 2. If you go back to our friend Tom Lee over at Fundstrat, well, he said he believes that even 1 rate cut in 2025 is good and is bullish. Why? Well, because it extends out the rate cutting cycle. This allows the market to breathe and allows rate cuts to work into the system. If the neutral rate is 2.5 to 3%, well, that means we still need about 8 to 10 cuts to get to that neutral rate. So if we get just 1, 2, or 3 cuts next year, that means the market literally has years worth of cuts left to look forward to. If you cut rates all at once, maybe you get a massive pump. But most likely you'd freak markets out, because they'd be thinking, oh no, what does the Fed see behind the scenes that warrants these massive cuts all at once? What you're seeing right now in markets is not a panic, it's simply a breath. And with this new policy of cutting over a longer term time horizon, well, that allows this bull cycle that we're in, which is quite beautiful, to breathe and stretch instead of just endlessly balloon until another asset bubble pops, right? For folks over the last couple of weeks that are like, I just wish I could buy the dip on something, well, guess what? These dips are your opportunities. Every time the bull market breathes, that's an opportunity. Okay, so we need to start with SOUN, SoundHound AI. So SoundHound AI has been an incredible performer, to say the least. Sound is an interesting play because not only is she one of the only small caps leading in voice AI, but her backing by NVIDIA's investment brings a lot of buy and holders into her. And at the beginning of this year, we made a video breaking down how this was a buy at $3.54, but SoundHound didn't go straight up. No, she went up, then she went down, then she went up, then she went down, and now she's absolutely skyrocketing. So if you played this and you're benefiting right now, congratulations. You did a great job. You deserved your win. Now, anyways, we alerted $5 strike calls for Sound on September 27th. They were at about 71 cents at the time, and as of this morning, they ran to $18.25 at highs. This chart shows the max profit potential since our alert, but obviously individual trades can vary. Just to show you the math here, let's just go ahead and say that you waited after our alert and you waited to buy them at $1. Well, $1 times 100 to get one contract, well, that's $100. Those $100 at highs would end up $1,825 as of this morning. You were essentially risking a max loss of $100 to get up to what is now a high at $1,825. Pretty nice. Moving forward though, look, I'm not a fan of SoundHound AI at these prices. Wait for a big dip cycle and then reassess. Remember, there are 3 rules that you got to follow. Wait for a dip, manage risk, and watch for key levels to be hit. SoundHound AI can easily run more, but it's going to be very brutal once it has its breathing cycle, so take some profits off the top at the bare minimum. Okay, next, Tesla. So Tesla every few years gets into a massive boom cycle that takes it way above its previous all-time highs, and then it stagnates or even drops for years, and then another boom cycle comes. Right now, we are still around mid-boom cycle on Tesla. That doesn't mean there's not going to be cool down periods, but it does mean the overall momentum cycle points upward. Tesla stock has only gone up about 15% over its previous all-time highs reached years ago. Hedge funds buying this as a momentum player, easily expecting this to go far above its all-time highs, not just 15%. Why do I think that? Well, because if you look at almost all of Tesla's previous breakout cycles, it's never just 15%. It's always like 100%, 200%, in some cases 1,000%. Is it going to be 1,000% this time? Of course not, but it could easily be 50, 60, 70%. So how do you play? Well, for context, we alerted 250 strike calls on Tesla back on September 17th to play off this momentum that we were expecting, and as of highs this week, they were up 922%. Pretty nice for a max profit potential, right? But the stock itself during that same time span only went up about 120%. So again, options, very crucial tool. Now, what about moving forward? Well, I think Tesla is overdue for a 10 to 15% correction, and honestly, calls are super pricey right now. IV is super expensive. Now, you could still snap up some far out of the money deals dating out to say January if you want to buy some leaps for 2026. But before that, expect a big pushback, 10 to 15%, because that is what has happened historically, and overall markets are also due for that 10 to 15% pushback. Wait for a dip, manage risk, watch for key levels. Now I want to talk about Mara. So Mara is a dirty tease. She's flatlining despite Bitcoin continuing to make new highs this week, and it's frustrating to see hedge funds continue to short her and long Bitcoin with the simple idea that if we head into a major crypto winter, that Mara will head down faster because mining has a big operational cost. There's a lot of overhead there. What I would say though with this stock is that, look, Mara tends to historically be a big disappointment early on in a Bitcoin super cycle. But as Bitcoin continues to grow, eventually Mara is going to report a blowout earnings report because that's her whole business model. And then at that point, if Mara hasn't corrected to the upside, well, you see a major gap up. Okay, next, before we get on to our new entree, I want to go through some of our members and what they're playing right now and give some feedback on that and some congratulations. And as I'm going through these, folks, keep in mind that everybody brings with them different levels of experience, capital, risk tolerance, and of course, options are risky, so different people play in different ways. So Mr. Kanye here, hopefully not West, said, "Thanks for helping me wipe out all my losses from my portfolio with this play. LOL, wish I had held on to more of it, but I guess it's never a bad thing to lock in profits early." He did his frisk, he took the risk, and that paid off for him, but he bought sound calls super early, and looks like he went from around a $114 position to a $1,520 position. Very nicely done. Options member Never Forever posted a long message with lessons learned, but what I like is that he posted both his wins and his losses here. You could see he played off calls today on Sound, Tesla, Nvidia, and Mara. Some of the Tesla calls fell today, and so did Mara. You're not going to hit home runs on everything, but those Sound calls, oof, absolutely printing and making up for it. Nice work, Never Forever. Rocky, he's been a member with us in ZipTrader Options, and I've seen him for years in ZipTrader U. Hello, Rocky. Played super aggressively some 0DTE options on Sound, some dating out to April, and some leaps. Hundreds of percentage point runs. Long time. Played HIMS calls, another big play we love. He chose a wide range of strikes and expirations dating out to January and February, and he posted a pretty nice gain. Benji, good job on the Tesla calls. TN79, good job on the Tesla calls. Kaya, Sam, good job on Sound calls. Kusha Patel, good job on Sound calls. Counterflow said, Zip Charlie, bought MRVL calls on your alert and sold at the peak. Appreciate the call out and the 235%. Looks like he did a 235% gain here. Average cost at $2.58, and the contracts ran to $8.50. Very, very nice job. Again, you took the risk. You did the frisk, and you're the one that benefited. Nate played MRVL as well, bought 300 shares. Those went up about 69%, sold some far out of the money calls, and then bought one January 17th, 2025 $70 call. Now look at his return, 597%. Now, congratulations and good work to all these folks, but remember, don't get cocky. It's not time to get greedy. It's time to lock in profits. If you are somebody who is playing these moves to the upside and you're up 100, 200, 300%, and you're starting to see some weakness, take some profits off the table. If you're still in for a longer momentum ride, that's fine, but take some profits off the table. Now, if you would like to join us and become an options member and get all of our alerts, our step-by-step video lessons, which are hours long, and our private Discord chat, I'll put the link to that down below. And my team and I are doing our best to make sure that we're all prepared for the next new year. Coupon code Santa will get you a nice discount. But remember, our options membership is really just a tool. You're the one that's going to be doing the frisk. You're going to be the one taking the risk. You're the one that's got to put the hard work in, right? We're just one tool trying to get you there faster. Okay, now it's time for the main entree. So what if I told you there was a stock that had revenue up almost 20% year over year, net income up 157% year over year, diluted EPS up 161%, net profit margin up 119%, operating income up 223%, net change in cash up 22%. And what if I told you the stock also had a multi-decade track record of huge results? What if I told you the stock was a member of one of the hottest sectors of 2024 and likely 2025 as well? What if I told you all of these factors and then I told you that the stock was down about 8% year to date? What would you say? You'd say, what the hell, Charlie? You'd say, what the hell, Charlie? That's a great buy. And that is exactly what is happening with AMD right now. While all of its competitors are up hundreds or even thousands of percentage points year to date, well, AMD is down. And even competitors that have worse fundamental numbers are destroying it in terms of price appreciation. So then that leads us to the question here, which is why, and more importantly, does AMD have what it takes to hit those sweet all-time highs again? Well, spoiler alert, I believe it does, Absolutely, and I'm going to break down exactly why. So for starters, AMD isn't just another semiconductor company. It's a key player shaping the tech landscape. The company designs high-performance CPUs, GPUs, and custom silicon solutions that power everything from personal computers to gaming consoles, and increasingly, cloud data centers. AMD's products are the backbone of industries like gaming, AI, and high-performance computing. To get specific, AMD's Ryzen processors absolutely dominate the consumer PC market. These chips offer better price to performance than Intel's, making them a favorite for gamers, content creators, and professionals. Then there's AMD's EPYC server processors, which are eating Intel's market share in cloud data centers. Big names like Amazon Web Services, Microsoft's Azure, and Google Cloud are rolling out servers powered by EPYC chips because they're cheaper, faster, and more energy efficient. Gaming consoles, AMD is in Xbox Series X and PlayStation 5, and that's not a small niche. It's a multi-billion-dollar market that AMD owns a significant piece of. And let's not forget AMD's GPUs, which compete directly with NVIDIA in gaming and professional graphics, and many would say are actually far better than NVIDIA's in that space. But what makes AMD stand out is not just its products, but actually it's the company's strategy. You see, AMD doesn't manufacture its own chips. It partners with TSMC, the world's most powerful semiconductor foundry. Now, some people will say, yeah, outsourcing is kind of a risk though. But look, AMD can go ahead and contract with whoever they want, but the overall strategy stays intact. Their outsourcing strategy lets them focus on design while sidestepping the manufacturing delays that have plagued competitors like Intel. It's like playing chess while others are playing checkers. But why does AMD even matter? What's the point? There's a lot of other semiconductor stocks, right? Obviously, we've all heard of AMD, but what is really the whole purpose of even focusing on it today in today's video? Who cares that the stock's down? Why is there even opportunity here? Well, it's very, very simple. AMD is a force multiplier in every industry that it touches, and markets are sleeping on that. So then that leads us to the question, which is why exactly is AMD underperformed this year if it's so great? Well, to understand this, we need to talk about AI hype, timing, and market perception. So first off, 2023 and 2024 have been the year of AI stocks, and more importantly, chip stocks. NVIDIA has dominated the headlines with its H100 and A100 GPUs, which are of course essential for training large AI models like ChatGPT. These chips have become the must-have hardware for companies looking to scale AI applications. NVIDIA capitalized on this hype early, creating a perfect storm of demand for their products. Meanwhile, AMD's MI300 chips, which directly compete in the space, have been slower to hit the market. Timing matters, and AMD simply didn't get its AI products out the door fast enough to ride the initial wave of AI euphoria. Another factor, market perception. I mean, NVIDIA had been crowned the king of AI, and in the stock market, perception often drives price action more than reality. AMD has been quietly building its AI capabilities with much less fanfare and hasn't had the same blockbuster product launches or big customer announcements that grab headlines. In a hype-driven market, well, AMD has been completely overshadowed. Now, of course, there are some macro trends that worked against AMD originally, but I believe those are flipping. You see, consumer PC demand had softened, and AMD's exposure to the segment had weighed on its revenue, and the company also faces some challenges in the gaming GPU market where NVIDIA had still held the lion's share. But if you look at AMD right now, where it's sitting, AMD has spent the last 12 to 18 months aggressively pivoting to ride this AI business trend and all the demand that's coming with it. And all of this together is setting it up for a ridiculous 2025. I am bullish on AMD because I believe the pieces are falling into place for a big comeback. For starters, their chip is going to blow the industry out of the water next year. AMD's MI300 chip isn't just another GPU, it's a hybrid processor that combines CPUs, GPUs, and high bandwidth memory into a single package. This design is perfect for AI workloads, from training massive models to running inference at scale. Early testing shows that these MI300 chips are competitive with NVIDIA's best offerings, and its cost advantages could make it a favorite amongst cloud providers looking to cut costs. This is about a $100 billion market, and AMD is just starting to tap into it and has a lot of catch-up game here, and next year is going to be the year for that. Secondly, look, AMD is winning in the data center space. The company's EPYC processors are gaining market share at a rapid pace thanks to their energy efficiency and performance, and cloud giants like AWS and Azure are doubling down on using them. Look at the charts yourself. Data center demand doesn't look like it's slowing down anytime soon. Thirdly, AMD's gaming segment is very attractive. Demand isn't slowing there. Fourth, and probably most important, importantly, AMD's valuation is ridiculously attractive, especially if you do comps with the other major companies in the space. So anyways, folks, look, AMD's story isn't over. I believe it's going to be the comeback king of next year, and you're going to be very, very excited to see what it has in store for us. But anyways, what is the best way to play it? Well, of course, you could just buy straight up shares, but in this bull market, I would say go more aggressive and look at leaps. You can get way more bang for your buck that way. And since you stayed to the end of this video, I'll go ahead and leak my own intellectual property here. So this morning, we alerted for options members AMD 150 strike calls expiring January 16th, 2026. And I believe that gives you ample coverage for a massive 2025 rally. Of course, you can go earlier in expiration, or you can go farther out of the money if you want a different deal on the contract and you have a different perspective. But these are the ones that I believe you're going to want to be in if you want to play off a mid-year rally and a mid-year new high recovery cycle. It's difficult to predict, but I think Q1, Q2 are going to be very, very positive for AMD. And if you can play off these leaps throughout that process, well, guess what? You can lock in profit. You don't have to hold all the way to expiration. Most of the time, it doesn't even make sense to do that. Anyways, folks, as always, stay frisky and always think about your risky.